Welcome back to BAS 120. We're going to go through something similar to example 2.10 in the book. We're going to model a net income or a profit and loss statement. I've made it a little different. I've expanded it to what businesses often do is they often look at a best case scenario, a most likely, and a worst case scenario. So I've kind of taken an assumption of, let's say I'm going to put a hot dog stand out on campus, and I can sell each hot dog for $2. Here are my assumptions. I'm a selling price of $2 per unit. It cost me 65 cents for the hot dog and the bun and everything. My wages, I'm going to work just lunch hours, probably from 11 to 3, give me time for setup and cleanup at $10 an hour, so that's $40 in wages. I'm trying to calculate my income for a day. It cost me $20 to rent the stand, and taxes about 25%. So the last bit of my assumptions is, well, sales units, how many can I expect to sell? Well, best case, if it's a nice day, might sell 100. Most likely I'm going to sell 50. Worst case, it might rain and I might only sell 25. So set up my model, sales, or sometimes it's called revenue. And you can see this cell is going to be my sales unit price, which I'm going to lock in with my F4, times my quantity. So my sales price times my quantity of units, and then I just copied this on over. And you see, because I fixed this, it'll continually lock on that cell. So you can see I just copied this guy over by simply dragging on over. My costs of goods sold are very similar, except it's the number of units times the unit cost. And again, I want to make this unit cost a fixed cell or an absolute cell. In that way, when I copy it on over, my units change, but my cost per unit does not change. My gross profit, which is an accounting term for simply revenue minus the cost of goods sold, is simply my 200 minus my 65, and then I copy that on over. Now, accountants might call these a little bit different. I called my sales expenses the wages because I count myself as a salesperson. And notice this cell is always 40 under every scenario because it's not a variable cost. My cost of labor, I work the 4 hours irregardless and get paid irregardless of how many hot dogs I sell. So that's a fixed amount of $40, as is my administrative costs, the cost of the stand. And again, I've just made both of these whatever my assumptions are so I can change the assumptions. The earnings before tax are simply my gross profit minus my selling minus my administrative. And again, I didn't make those absolute cells because I want those to change as the scenarios change. So you can see in the best case I make $75, worst case I lose $26. Taxes are simply my earnings times my tax rate. And again, my tax rate is going to be an absolute cell because I don't want that 25% to change. And then here's my net income after tax, which is just my earnings before tax less my taxes give my earnings after tax. And what this allows businesses to take a look at is very quickly I can look at several scenarios, because life is really kind of a range because you can't predict the future. So under these assumptions, I know best case I'm going to make about $56 a day. Worst case I might lose $20. Now I can say, well, what if I don't sell any? Well, worst case I lose $45. Now this is a rather simplistic assumptions because it assumes if I don't sell any hot dogs, I don't have to buy any, which isn't perfect, but it at least gives businesses a sizing, and lots of businesses when they're doing the planning like to take a look at scenarios, and lots of times it's a best case, most likely, and a worst case because it conveys a lot more information than if I just did one scenario. That's example 10. Thanks.